Now, Ghana recently clinched a debt restructuring deal with its official creditors after defaulting nearly 2 years ago. In the southern parts of the continent, it took Zambia 3 years to strike a deal to restructure over $3 billion of its commercial debt, a slow process with lessons for other nations. Samantha Singh-Jami, Africa's strategist at RMB, joins us with greater perspective on the two countries, their debt position, what it means for their economies, and how ratings agencies view them. Samantha, thank you so much for your time today.
Thanks. Happy to be here.
Samantha, before we get into Ghana and Zambia, what we know is the United Nations actually has recently come out being a little bit critical about just the state of sovereign debt around the world, really concerned about the balances we're seeing and even more concerned about developing nations like the other ones we'll speak about this afternoon. I'm keen to get your thought here. Is this a risk that we're understating as a planet?
It's a planet. I like that. I mean, I think I would tend to agree with the UN on global public debt. So they suggest global debt reached about $97 trillion in 2023. So it's almost up about $6 trillion from 2022. So I guess coming out of the COVID pandemic, you could expect this upward trend in debt generally. But I think the one thing to consider is that advanced economies, when you look at it, debt to GDP is over 100% currently. And when you compare that to sub-Saharan Africa, on average, it's only around 60% of GDP. So sub-Saharan Africa debt to GDP is about 60%. But why do we consider the situation, I would say, worse here in sub-Saharan Africa or even the broader continent? It's largely because of the high debt servicing costs, right? So obviously we pay a lot more for debt in general. So I think the overall scheme of things, yes, sub-Saharan Africa's debt increased substantially, I would say, since HIPC and other broad debt relief initiatives. So it's that, and that needs to be addressed, and how to balance some of the development needs on the continent and borrowing. But then we also have the high debt servicing costs. And in some cases, we've seen this affect countries quite substantially. So we've had debt sustainability issues on the continent, and obviously we've had a couple countries having to restructure some of their debt because of this.
With that said, of course, Zambia and Ghana have really led the charge. I think Ethiopia also part of this conversation to some degree. Samantha, I want to speak about, what we saw during COVID-19. And then, of course, distress. That was the term we used for a while. And now restructure. We've been having this restructure conversation for a while.
Yeah, I think going into the pandemic, as I mentioned, debt levels were already high. So we had, the debt relief, through HIPC and various initiatives, early 2000s or so. And, some of the debt levels obviously increased because we have, these massive development needs. And so there's always been this need to try and balance, the financing of these projects with more concessional debt, but it's always healthy to have a good mix. So we've seen that, and then on top of it, obviously the added costs from the pandemic itself. So of course, countries went over the edge. Personally, I don't think Ethiopia had that much of a debt issue because they had done some of the restructuring with China previously. But, when your debt levels are high and your debt servicing costs are also very high in the case of Ghana and Zambia, it becomes difficult to sustain that debt. So that's where we have it. I mean, we've had to go through some restructurings on the continent.
We, of course, have this G20 common framework, and that was introduced to expedite this debt overhaul process. It hasn't quite gone as quickly as we had hoped, Samantha, or is it new to everybody, so we're all kind of learning, and actually slow and steady wins the race?
Yeah, so I would say the G20 common framework has been challenging in some ways, maybe in many ways. I think especially on the implementation, of course, which has caused significant delays. I mean, we had Zambia obviously defaulted in 2020, and we're sitting now in 2024. And, yes, part of their external debt's been um, restructured, but there's still a bit to do. So I think the process has been lengthy. Receiving financing assurances has been also a lengthy process, and I think it's hindered sort of the faster movement to ensure debt sustainability in most of these economies, or at least two of them here. And then not only hindering debt sustainability, but in some cases, just overall macroeconomic stability. So, we have Paris Club on the one side, and then China, which has been emerging as a major creditor on the continent, having to navigate this too.
On the other side, there's also what many might be calling private creditors, hedge funds, fund managers. And I think the conversation there is a little bit more laid, a little bit more complicated than it might be with members of the Paris Club or even with China. Samantha, help us understand that, because I think that's also been a huge bottleneck in this process.
Yeah, so I mean, the whole idea of the G20 framework, it's designed to speed up, maybe even simplify debt restructuring. But it's been, challenging for some of the factors that we both mentioned earlier. So the comparability of treatment has been, what's been the core of the framework. And, you have various discussions with official creditors and private creditors, and usually you find that the Eurobond holders are brought into the conversation a bit later. So yeah, it's been complex, just mainly because there are so many creditors to deal with, and then obviously you need to find a way to achieve debt sustainability, following the restructuring of the debt. So that's where sort of the IMF, World Bank, the debt sustainability analysis comes through as well.
And all in all, while all of this is happening, and a lot is happening, these economies still need to run, governments still need to have budgets. The fiscus still needs to be rather operational. I'd like to speak about that, what that might mean for growth, what that might mean even as the rating agencies view these economies, and then the prospects of just stability from a fiscal perspective for these countries, because as we've both actually overemphasized here, it's taken long, it's been very complex.
Yeah, thanks for that. I mean, I think to start off with the economic sort of prospects, I mean, we had Ghana's Q1 GDP released yesterday. I'm sure the print actually surprised many because the economy is showing some resilience. I think growth coming in at 4.7% in the fourth quarter. So that compares with about 3.8% in the previous quarter and 3.1% in the first quarter in 2023. So despite this performance, I think was part due to base effects, but was also largely industry driven. I think this year is going to be challenging for Ghana. So it's not only about the debt restructuring, but you are seeing, a lot of challenging climate conditions on the continent. So in the West Coast and Southern Africa, East Africa as well. So there it's a bit complex because there's been the strong demand for foreign exchange in the market when you have a lot of these agricultural concerns and low cocoa output. So even in the first quarter, we saw the cocoa sector contract by 20%. And I think in the last MPC meeting, when they released some of their BOP data, we saw a massive decline in cocoa receipts. So I'd say, once the foreign debt restructuring has been completed, I think there's, a lot more confidence in the Ghanaian economy. I think, you will likely see upgrades in rating agent, the foreign currency credit ratings as well. So I think all of that will help improve investor sentiment. For Zambia, I think, we've been more optimistic on growth. We do think that there will be a slowdown in the Zambian economy compared to last year, just given all the weather conditions, and they have a state of disaster. So there's certainly some challenges in that economy, but I think we expect the mining sector to do a lot better. Despite it and despite some of the electricity issues that are going on there. So yeah, I think the economy. There's the restructuring issues that have been impacting it, and once these are over, sentiment lifts, and you should see a lot more flows and you know improvements in the economy. But I think outside the restructuring, there's been a lot of external challenges. One being some of the weather conditions that have been impacting these countries.
Well, Samantha, all we have time for today. Thank you so much for taking us through this one, a real interesting one, a complex one indeed. That was Samantha Singh-Jami. She's an Africa strategist at RMB.